Why is it that sometimes banks will approve you for less than what you're currently paying in rent? Most of the time people think that it has to do with their credit score, and to be honest, it has very little to do with your credit score and almost entirely is based on your debt to income ratio. Credit scores are important. They are what the pricing for the loan is going to be based on, and the higher credit, the more cost effective your loan will be. Having a higher credit score doesn't necessarily mean that you're going to qualify for more. Mortgage lenders are going to be looking at your overall monthly qualifying income, and qualifying is the key. I've explained that in a few videos, but can go over it again if you have questions. And they're going to also look at your monthly minimum debt payments and then determine, based on the type of loan that you're getting, how much you'll qualify for. Landlords, on the other hand, often will just look at your total monthly income, not your qualifying monthly income, and they don't really take debts into account, or at least not in the same way that a mortgage lender will. It's not uncommon for a landlord to take your total monthly income and divide it by 3 and then spit out a number, and that's what you qualify for. Typically, a landlord's going to be looking at the total combined income. So if you have a roommate, they're going to be looking at that. If you have a second job, they're going to be looking at that. If you work overtime, etc., they're going to be looking at all of that. So a mortgage lender can only look at your qualifying income. So there are stipulations on what can count and what can't. And obviously, if you have a roommate or you have a partner that you're going to be living with, we can't count their income unless they're going to be on the loan with you.